Former Prime Minister Manmohan Singh, the man who unshackled India's economy. Right to education, right to information, insight to food securities and rural job guarantees. All this that he achieved, he has passed away at the age of 92. Leaders cutting across the political spectrum and across the globe are paying rich tributes to the man who pulled Indian economy out of an abyss, as it were. Or as Dr. Singh was pivotal to the creation of the forex market and the debt market, as it were. Those markets didn't even exist before 1991. And he gave, of course, a very big boost to the stock markets by opening the doors to foreign investors, more importantly, to imports and exports. You're watching Editors Roundtable. I'm Latha Venkatesh, and with me are Nimesh and Surabhi Upadhyay.
Hi, Latha, and thank you for recapping the absolutely, massive contribution that Dr. Singh has made to the economy, to the country that we live in today, to the benefits that we enjoy, the benefits of liberalization. I think we grew up in the post-liberalization era when the license Raj had ended, so a lot of us don't know how painful it would have been, but we definitely enjoyed the fruits of all the hard labor that was put in back in those years. We've got, of course, Nimesh with us. We have Hiren Ved joining us on the show this afternoon to wind down the year. It's the last edition of Editors Roundtable for 2024. So we have plenty to discuss, but I'll quickly recap, what this week meant for the market, and actually not too much, considering that it was thin trading and that we had the Christmas holiday in between. But all put together, Santa did show up finally, and why do I say that? Because at least the Nifty and the Bank Nifty managed to put on 1% by the end of it. The mid-cap and the small-cap indices were absolutely flat. But to be fair, for the better part of this week, we had a very frequent pattern with the market would open with a gap up. FPIs would come in and they would dump cash stocks worth 2,000 crores, 2,500 crores, and we would end absolutely flat. The pattern only broke actually on Friday, when finally it seems maybe, we'll have the final data in the next couple of hours, finally maybe we didn't have that intensity of FPI selling on Friday. But as I said, for what it's worth, bulls will take it with both hands, that we have at least a little bit of hint of green on the screen. But the other big headline of the week, obviously, was what the currency was doing, and Latha is going to talk about that in more detail in just a bit. But Nimesh, I think thin trade, and I think plenty to discuss and go over as the year winds down. It's been quite a year, especially the last quarter.
Oh, absolutely. So again, last 10 days, we typically see the volumes dry down, the FI flows are quite muted. And again, now the trend is even the domestic flow seems to be not much active in the last 10 days. So pretty much everybody seems to be on a holiday mood. They travel out. So the outbound travel has picked up so much in the last many years. It's unbelievable. So again, no point talking too much about the last 1 week or 7 days or 10 days of trade. But in general, 24 has been a good year, right? This is the 9th consecutive year of positive return. It has happened for the first time in the Indian history. So again, a lot to talk about and a lot to cheer as well. It's been a good year, so to speak. Mid-cap, small-cap has done phenomenally well. And we have somebody who's been so much into the markets for the last many years, many decades, so to speak. Hiren, just if you want to, rewind and give us a perspective on what happened in 24 and how we look for 25.
Since you mentioned being around since many decades, and today is a sad day, but I came to the markets in 91, which is exactly at the time of liberalization. And I think every citizen, every entrepreneur, every investor should really thank for what Dr. Manmohan Singh did. He sowed the seeds of reforms which unshackled India. And we are all enjoying the fruits of this all wealth creation that we're seeing now, several decades after, what he did. But having said that, I think, as you rightly said, if anybody told us in 2024 that you're going to have one more war, you're going to have an election in which the BJP will not get 272, you're going to have a US election, you're going to have so much of geopolitics during the year, you're going to have incessant FI selling. You would have probably not envisioned that the markets would have ended the way they've ended. And that tells you about the resilience of this market, right? That despite so many challenges thrown at this market, on the whole, the market's been fairly resilient.
I think that resilience is largely because of the domestic flows, right? The sheer amount of domestic money which is coming into the market.
Exactly.
5 lakh crores of fundraising is done. and FI selling has happened, and still what we are, like with the kind of gains we've seen in 25.
Because retail investors, since
Yeah.
I look at the data so closely this year, and we have data till November because the December figures will be published only in January. In equity mutual funds, retail investors pumped in 3.5 lakh crores, and that was the biggest category. It wasn't institutional investors and debt, etc. Nothing. It was all equity. 3.5 lakh crores,
That's the
helping
power
us
of,
absorb all the selling
absolutely.
and the paper.
But they were absorbing the selling. I mean, all that money also got absorbed because of the IPOs and the QIPs
absolutely.
that we saw.
Record,
so,
right?
you know, to just repeat Nimesh's question, usually when a fall starts, it has to be a gut-wrenching fall and then it comes. But this has not been that big a fall. Do you think we are already at the last, say, 4-5% of the fall?
You know, Latha, it's always difficult to predict what happens in the short run. But my guess would be that I don't think there is a very large downside to this market, right? A lot of the so-called Trump trade has also been preempted, so to speak. The dollar's been up, the FIs have been selling, emerging markets haven't done anything great. And also, in one of the challenges is the fact that we've also seen a cyclical slowdown in the economy and earnings. And the market's taken that in the stride as well, right? So I would say yes. I mean, I don't see a very large downside. Maybe we spend a little bit more time consolidating until the markets find the confidence that this was indeed just a very shallow slowdown and that the economy and the earnings are going to rebound. So I think come Jan, Feb, you know, the market should find its feet. Maybe the first few days people will wait and watch to see what Mr. Trump does, how the budget goes. And I think once some of these events are done and the earnings season is out of the way, I think markets will get their own footing and direction. But I don't see a big downside to this market.
Okay, that's an interesting point. But, you know, speaking of Mr. Donald Trump, I think he'll be the person setting most of the agenda as the year opens out. You know, Latha, even before the tariff wars actually begin in their entirety, the move that we've seen on the currency, the rupee broke past 85 somewhere middle of December. I think it was 18th or 19th of December. But then the slide, especially this week, today, was quite rapid. So what have you made of it?
Okay, I'll just come to what this means in perspective. But just to describe today's event, there were the usual reasons. The dollar remained at 108.15 plus. And there is always importer buying, other than FPI buying of dollars. There's importer buying during the month end and the quarter end. So that was there to play. But that was there yesterday also. So why the big fall today? The additional reason appears to be that today was really thin trade. I mean, as with each passing day, the treasury benches are getting hollowed out. So even a small move can make a big difference. But there were two other differences. One is that the RBI was kind of supplying dollars, going long rupee in the NDF market. And the NDF contract expires today, 1 month contract and 3 month contracts. So it's possible that they were allowing some of them to be settled here because they were quite long on the rupee. And therefore that got settled. A second reason could be that when the Reserve Bank bulletin came out for December, that came out 2 days back, we all discovered that the rupee overvaluation in November was 8.2%. The rupee overvaluation is usually about 104, that is 4% or thereabouts. This 108 kind of, there were
against a basket of
40 currencies. Against a basket of 40 currencies with whom India trades and adjusted for their inflation. So it's a very important number, but of course the Reserve Bank doesn't follow it every day to keep it at 100. It flows between 95 and 104 to that index. But the point is that 108, my sense is, or at least that's the market's best guess, the Reserve Bank thought that speculators were on the warpath after seeing that 8% overvaluation to try and trap the Reserve Bank. And they let it, the Reserve Bank therefore just stood out of the market, let the currency fall, and when it fell to 85.75, make that sudden appearance and half the loss was wiped back. Okay. So it could be just that that gut-wrenching fall came today, and we may see more gentler moves in the coming days. But let me leave you with just one final thought. The rupee is still the outperformer. Yeah. If you look at it from November 1st to date, we are about 1.5% down, or even less than that, because it was 1.5 when we were 85.75. We have closed at 85.53. So we are probably about 1.45 down. A whole lot of currencies, including the renminbi, are 2.5% down from November. if you take from Jan to now, we are down about 2.4% or thereabouts. The rest of the currencies, if you looked at Filipino peso or renminbi itself, I mean, there is between 5 and 10% depreciation.
Yeah.
So, the rupee's really done well. And my sense is today's Reserve Bank move may put speculators on the watch.
Okay.
But regardless of that, how do you see this in terms of stock picking?
Yeah, and
Does
will
it
it,
make-
will it impact any
Yeah.
particular sectors like IT, pharma, the export ones?
Yeah, I know. I mean, this always comes up when
Yeah.
the rupee
Currency
depreciates, and I think at the end of the day, rupee will find its own value at whatever speed it does. But I think it's important because to retain export competitiveness, it's important that the rupee finds
Yes.
its own value. And I think also one is the currency, but also what happens is that usually the pharma and the IT sectors play counter-cyclical to the more domestic, capex, cyclical kind of oriented sectors. When they don't do well, is usually when the dollar is
defensive.
strengthening and so on and so forth. But that's good because, it can help earnings a little bit because it kind of acts as a custom duty on imports, right? So, and a benefit to the exporters. And you can see that, both pharma and IT as sectors have held out in the last few
It's not a
months.
factor in your stock picking.
No, not really. Not really.
But if I could extrapolate, exactly, so the currency will do its own thing, and a lot of these companies have very smart cross-currency hedges as well. In fact, for this quarter, an IT analyst was telling me that just for Q3, there will be a negative 1% cross-currency impact
the euro's
because of the other currencies moving. But these sectors will be impacted by Donald Trump's policies, right? Now, we don't know what he'll do on immigration. We don't know what shape and form, this Biosecure Act is going to take, if it will take off at all or not. But given the exposure of some of these sectors to the US, how are you looking at them right now?
Surabhi, I think I wouldn't want to read too much or preempt what Trump is going to do. I think everybody's decided what Trump is going to do before he's actually done anything, right?
Because everybody's so worried and
Everybody's so
afraid.
worried. Yeah. So I think, look, I mean, politicians say a lot of things, but it's not very easy to say that I'll pull up custom duties, I'll clamp down on immigration, but I want manufacturing in the US. You can't have everything, right? So I think that rather than preempting some of these things and trying to change positioning in your portfolio, it's better to wait and watch and see what he's
Fair
doing,
point.
then assess, and if then at all it's required, then you do your shifting. But I don't think, frankly, other than short-term traders, who try to preempt some of these moves, it really makes sense to take long-term investment decisions based on what could happen.
Fair point.
So,
Fair point. Let me throw another sector at you, and that after Nimesh extrapolates it. Cement.
Yeah.
It's been a year of consolidation in the cement sector, and today we saw yet another move with Ultratech picking up stake in Star Cement. Nimesh, just take us through a 180-degree
Latha, as you
perspective.
rightly pointed out, this year, 24, was a year of consolidation within the cement sector. So let me just throw some numbers to the viewers. In 24, nearly 40 million ton of cement got merged with Adani or Ultratech. Okay. Now, the top 5 players in the cement industry, now they command nearly 65% of the market share versus just 41% 7 years ago. So it's getting concentrated to the top 5 players. There were 10 deals which were announced in 24 itself, the highest since 2014. And the cumulative value put together is close to $4 billion. Now, what has Adani done this year? They've acquired Sanghi Industries, they've acquired Penna Industries, Orient Cement, Asian Concretes and Cements, and My Home Group. These are the 5 deals that Adani Group has done in 2024. They have now their capacity would have crossed 100 million ton. When they bought ACC and Ambuja, they were at 70, and they have a target of reaching to 140 by 27-28. So they're pretty much at course in achieving the target of reaching to 140 million ton in the next couple of years. So that's what Adani Group has done in terms of acquisitions in 24. Now look at the other big player, which is a market leader, that is Ultratech Cement. Now they've also done 4-5 acquisitions in 24 itself. India Cement was big one that they've acquired this year. Banpur Cement is second. They bought Kesoram Cement as well. This only today they announced a minority stake of buying Star Cement, close to 8.7% stake in Star Cement as well. They have a target of reaching to 200 million ton by 27. They're currently at around 160 million ton. So another few acquisition is what something they may look to add to in the years to come. Now the interesting part is at what value these acquisitions have been done, right? So I would say from a per ton capacity, Ambuja has been pretty much smart in their acquisitions. Their acquisition costs have between 80, 85 or 90 million per ton in terms of the acquisition. $90 per ton. Correct. So that's what they've paid for most of the acquisitions. Vis-a-vis, if you look at Ultratech, we could see that maybe they're a bit, they paid more or expensive in terms of their acquisitions. Like for example, India Cements, that's been over $100 per ton. Today's Sagar Cement deal that they've done, on an expanded capacity, it would be $120 per ton. But on current capacity, it's $150 per ton. So looks like, Ultratech has been a bit aggressive in terms of giving the price for the asset that they're acquiring. But as I said, nearly 10 deals in this year itself. $4 billion is what the biggers have spent in terms of consolidating and buying out the smaller players. Your thoughts, Hiren, would you look to buy the bigger ones, or the aggregators, or the smaller ones who could be the targets going forward?
So, Nimesh, logically speaking, with this kind of consolidation, the expectation is that at some point in time, pricing power will come back because, but if you look at the data, I think that on a consolidated basis, the industry is still running in the mid-60s of capacity utilization. So I still feel there is a lot of slack. And what's happening is that each of the players, because it's a regional industry, nobody wants to cede market share to the next guy, right? So I'm not very sure if we should jump the gun and think that now that the industry is phenomenally consolidated, they will raise prices tomorrow. I have my own doubts. I could be wrong.
You know who agreed with you and why you were probably not wrong? Birla Corp's Mr. Ghosh. We spoke to him just yesterday and he said exactly the same point, that those who are thinking consolidation means now we'll all get together and start increasing prices. That's not how it's going to work. If EBITDA per ton is to improve, it's probably because of the cost synergies, the alignment of the supply chains, and
capacities
all of that.
in the 60s, and unless it moves to the mid 70s or high 70s,
it's very difficult, in my view, that prices can increase immediately, right? Because everybody is looking at gaining market share. Nobody wants to cede market share. So I think we are a little bit away from that.
Any of the stocks in the portfolio?
We don't have any cement.
But are you looking to buy? Because it's been a dark year for cement, right? I mean, deals aside, nothing has worked, volumes are low, pricing is whatever, but you don't see that changing immediately.
No, we are very bullish on a sector that uses cement and that is real estate.
Okay, now we're going to take a break on that note, but we're going to come back with questions that will make you tell us what you are looking to buy. Back in a minute. Welcome back to Editor's Roundtable. We have been analysing the week that was, but it's also that time of the year when we have to analyse the year that was. And Nimesh has an interesting way of looking at the year with some top 10 numbers, Nimesh.
That's right, Latha. So, I was just looking at the entire year and what stood out for me, the top 10 numbers for 24. The first is, as we spoke in the this thing as well, this is the 9th consecutive year of positive returns for equity markets in India. It's kind of a record we've seen for the first time. Now, the biggest gainers came in the mid and small cap. In the mid cap index, 71% of the stocks give positive returns in 24. In the small cap basket, 75% of the stocks give positive returns in 24. Again, this is a kind of a record in the broader market stocks as well. The other big theme was fundraising, right? 5 lakh crore plus of fundraising was done in 24 itself. Just to give a breakup, in IPOs, we raised close to 1.2 lakh crore. In QIPs, we raised close to 1.3 lakh crore. And within OFS and blogs, we raised close to 2.5 lakh crore. So nearly 5 lakh crores is what we've raised this year so that again shows the kind of depth the Indian market has got now in this market. So that's something. Again, the big theme of this year was IPOs, right? I was just looking at the IPOs of this year. 81, 82 IPOs got done on the main board. I'm only talking about the main board IPOs. There were 11 IPOs which have given 100% returns, which means stocks have doubled after listing. But 24 of the IPOs have been below the issue price, which means 30% of the IPOs which got listed this year are now trading below the issue price. So again, not every IPO has done well for the investors in 24. And that's been the trend virtually every year. One stock which has doubled in the Nifty, any guess? It's Trent. The stock has doubled in the Nifty this year. So that's again, it's been a big outperformer. Again, within the IPO, the other big thing was the biggest IPO of this year, for the history in the Indian market, was Hyundai. The highest money that they've raised, and all was in OFS, right? Nothing came to the company, and they managed to raise 27,000 crores. And again, that's trading below. I think it's trading below the issue price. So again, kind of a number there. And last but not the least, this was the 7th consecutive year of rupee weakness against the US dollar. You've explained to a great extent as to what has happened. But again, these are the top 10 numbers on what stood out for Indian markets in 24. Record IPOs, record fundraising, record gains in the mid and small cap as well. So been a great year for 24.
This is so much fun. I'm thinking next year we should do a rapid fire. The IPO that doubled after listing, the one that sank below issue price, the biggest and the smallest.
No, Hiren, I want to get to you. Don't jump the gun on Trump. Don't jump the gun on cement till you see them improve their pricing. Where are you at the moment invested? What is interesting or will be for 2025?
I mean, Latha, for us, like we don't change themes with calendar years, right?
Good one.
Just because the year changes. I think there have been a few trends which have worked very well. I would say the post-COVID bull market has really belonged to sectors which were languishing pre-COVID. So power, capital goods, real estate. And then to that you add new sectors which were not there in the previous cycle, like the new commerce or the new age sectors or electronic manufacturing services, and then several others, right? Interestingly, since you mentioned about rapid fire, let me give you a rapid fire, right? 1, 3, 5 years, okay, going back, which has been the best performing sector?
Banks?
No. I have a guess.
It's amongst the bottom sector. It's actually amongst the bottom 5 sectors.
Real estate.
Real estate.
Oh. And he had some fabulous data on real estate.
And the thing so the thing about real estate is that the reason why we are bullish is that just like cement you mentioned, this is a sector which is phenomenally consolidated, right? So pre-RERA, there were many real estate companies. A lot of them have died. So now the sector is only in the hands of
say 10, 12
very
players.
large, well-capitalized, organized players. Secondly, in the last 5 years, how much wealth have we created, right? We did a study of companies which had a market cap between 1,000 and 10,000 crores. The median market cap in the last 4 years is up 4x or 5x, which means a promoter, assuming a 50% stake, was, let's say, for a 1,000 crore market cap company, he was worth 500 crores. Today, that guy is worth 5,000 crores. The guy who's worth 5,000 crores today is probably worth 50,000 crores. And today, they are also selling and monetizing their stakes. Where will they put the money, right? So with so much of wealth being created, that's one of the reasons why premium real estate is doing so well. Also, if you add up the market cap of the top 10 real estate companies, the number comes to 6 lakh crores.
Oh,
that's
it.
That's it.
In a market cap which is $5 trillion, and such a large asset class, you get to 6.5 lakh crores and the top 10 companies are done. Latha, in the previous cycle in 2008, the total share of market cap of the real estate sector to the total market cap was 8%.
Ooh.
Today we are less than 2%.
Wow.
Right? So the industry is consolidated. The players today are less leveraged. They have, in fact, the largest player, DLF, has actually got 4,000 crores of cash in the balance sheet. Right? Sales are flying. Wealth has been created. And since you looked at a lot of data, I tried to look at a lot of data. You look at pick up any mutual fund portfolio. Despite this being one of the best performing sectors over 1, 3 and 5 years, you won't find a real estate name in the top 5 holdings of any of the mutual funds, right? So I think it's much underrepresented. And what happened, because people thought this is a dirty sector, so people bought cement companies or housing finance companies or a tile company or a paint company, but nobody bought real estate, right? I think their time has come, and I think if next year rates were to fall, then I think you should get a significant fill up.
That's a superb way to wrap up this editor's
big
roundtable
idea.
with a big idea for 2025 and beyond. Thank you very much, Hiren, from all of us here. Maybe you have a great 2025.
All of you.
A very happy New Year.
Merry Christmas, a very happy New Year.
Thank you. And to all of you who are watching us, that's it on Editor's Roundtable. Have a brilliant weekend.